What's up, everybody? My name is Joshua Stanton. I'm the mortgage dude. First and foremost, I just want to explain what the all-in-one loan is in a nutshell, and then I'll get to the simulator. The all-in-one loan is a mortgage accelerator. We built this product to help people pay off mortgage debt quicker and cheaper than other alternative mortgages. The second part of this mortgage is a home equity line of credit / checking account. So this mortgage is extremely different. It's very dynamic. I love it. I personally use it. I do a lot of videos on it. So you can go and watch those videos and hopefully get a good understanding of what this mortgage tool does and how this can help regular people like you and me pay off debt quicker and cheaper, and also use this product if you want. Multiply real estate. Use it however you like. It's mortgage freedom. So that's what I try to teach people. I've already built this scenario from top to bottom, so I'm just going to go through and explain everything. So I asked the client how much they thought their house was worth. They said about $500,000. Their loan balance is about $350,000. Right now, they're on a 30-year fixed mortgage at 3%. They've been in this mortgage for a couple of years, 24 months. You have the built-in mortgage calculator. It tells you what the principal and interest payment will be on that. And then they were thinking of taking out $50,000 to do some home remodeling from a home equity line of credit. And they said that they found one that was 5% or so. And I asked them if they were going to make extra payments on it because you got that monthly payment. And they said, yeah, we'll probably make extra payments to pay it off quicker, maybe about $200 a month. All right, so we entered that information in here. And what I'm doing is I'm just entering the information that they tell me into the simulator. We're going to compare and contrast whatever the situation is, right? And see if it works, see if it doesn't. But this is a great tool to do that. So go ahead and click on next. Talk to the client. They told me that they make $10,000 a month. Put that in here. And then I talk to people about their spending habits. It's really important for the all-in-one loan to understand what those spending habits are, because it works a lot better if you use this as an accelerator, push money into this, it'll push down your balance and your timeline for payoff. If you're a person that is kind of paycheck to paycheck, this just really won't be the product for you. But get in touch with me for more information about that. So anyways, we break down their income and their spending habits, $10,000. They've got the mortgage that comes out along with the home equity line of credit and that extra $200. And then we've got their taxes and homeowners insurance. They tell me they pay about $450 per month for those. And then the rest of their lifestyle, their credit cards and their fund money and all the stuff, generally they said costs somewhere around $4,100 a month. So generally speaking, on average, they say they've got about $3,500 a month left over. So that $3,500 is how the all-in-one loan works. That extra money goes towards principal, pushing down your balance, therefore saving you money and interest and paying off the loan quicker. So I'm going to go ahead and calculate results. And for this particular person, in this scenario, if they used this all-in-one loan the way we worked out together, it looks like it would work out pretty good to me. If you did the all-in-one loan, they'd pay off the home in 9.1 years versus the traditional mortgage that they're in at 3%. Plus the home equity line of credit, they'd pay that off in 28 years. So payoff, there's a big advantage with the all-in-one loan right there. Second part, total saved with the all-in-one loans, almost $40,000 versus the 30-year and traditional home equity line of credit. That's because you're paying it off quicker, so you're saving a bunch of money in interest. One other thing actually that I forgot to mention, I did take out $50,000 for the all-in-one loan as well. So we're comparing apples to apples, taking out $50,000 from a traditional Heloc or taking $50,000 out of your equity with the all-in-one loan. So we're going to go ahead and click Save and Close. And we're going to go back to calculating results. And I'm going to bring up another page here. So just in review here, with scenario 1, we did the conventional product, the 30-year fixed at 3%, and the home equity line of credit at 5%. The interest as a percent of principal for those two is going to be about 45.1%. So when people get a 30-year fixed at 3%, most people have no idea how much that actually is in interest, right? Well, I'll tell you, for this scenario, it's 45.1% of your principal. So that's a pretty huge number, right? That's a lot of interest. That's how the banks make money, though. The average monthly interest payment over the life of the loan for the traditional and the Heloc is $1,540.94. You pay off at 28 years. So in the scenario 2 with the all-in-one loan, the borrower has a 1-month adjustable. That's the type of mortgage it is. The interest rate goes up and down. For the scenario that we show you, though, we build in the last 25 years of historical movement of that index. So you see the interest rate going up and down. Over time, it will go up and down, but we want to show you what we think is fair. So we use the historical value of the movement. So we're showing you this interest rate going up and down. But if you're using this thing like I show you, then it will be no problem at all. You're going to save a ton of money. It doesn't matter if the interest rate goes up or it goes down or whatnot. So interest as a percent of principal is 35.4% in this scenario. So that's about 10% less than the other scenario. Average monthly interest payment of the life of the loan, $1,297.97. So you're going to save about $242 a month on average using this product instead. And then the payoff, that's the huge thing. Really, to me, the payoff, 9.1 years. So it's 18.9 years difference than the conventional mortgage at 3% with the traditional Heloc at 5%. So you can save a ton of money, but also time. Time is the biggest factor here for me, because with the all-in-one loan, obviously mortgage accelerator, and then it gives you access to your equity for 30 years, right? So you can push money in to pay it down quickly. You can pull money out for whatever you want, whenever you want, right? It's got the built-in checking account. That's the huge thing. You're gonna need money throughout your life. Things are going to pop up that you're gonna need money for. With this, you can get ahead of the game. And then if you need money for anything, whether it's solar, or you want to buy a second home or investment property or anything, you have a medical bill, you can take that money from yourself and pay for whatever the debt is in a much cheaper fashion than almost anything else that I've seen out there. I run into people left and right that throw different ideas at me, and we look at the alternatives to the all-in-one loan, and they just seem more expensive, more rigid, and less opportunistic than the all-in-one loan. So again, you have that line of credit open for 30 years. So if you pay off in 9 years, well, you just have a home equity line of credit that you can borrow against should you need it for whatever. So it works like a charm. So thank you. I just wanted to show you this scenario because I thought it was pretty awesome. Right now, especially with interest rates up in this weird market, a lot of people are talking to me about traditional HELOCs. I'm just a big advocate for the all-in-one loan. I think it's a far better scenario, and I don't care what your interest rate is on your home. It can be super low, and I show people ways all the time to make the all-in-one loan work for them in the place of traditional avenues. So get in touch with me if you have more questions about the all-in-one loan, or if you want to run personal scenarios. I love doing it. I'm happy to do so. And absolutely subscribe to my YouTube channel and follow me for more videos like this. And if you have any other mortgage questions, happy to talk to you. It's Joshua Stanton, your mortgage dude. Have an awesome day and happy holidays.